Boom. What's going on, guys? Energy News Beat episode number 173 here on this gorgeous Friday, December 4th, 2020. As always, I'm your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Denver, Colorado, joined by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, oilandgas360.com. Stuart Turley, how you doing today?
It's a beautiful day in the neighborhood. You got a hall pass, and I'm wiped out.
I was about to say, I have never been more excited to give you guys a hall pass. We were just talking before we went live here. Holy smokes, this week has taken a toll on us. We've got some great things coming around the pipe, but we have a great show for you lined up. You could check that out on the rundown and a bag of chips. But guys, before we get into that, please subscribe to this YouTube channel, Oil and Gas 360-Enercom, the best place for all of your energy finance stuff. Quickly on the equities markets, I think there's a couple things that traders were eyeing. First, let's go ahead and look at the indices. Record levels. We saw 3/4 percentage point on SPY, NASDAQ up 1/4 percentage point, 3/4 percentage point off Dow. This is what's interesting, Stu. So here's why the sentiment was bullish today. Get this. Jobs report comes out today, as I talked about yesterday. Remember, consensus was 440,000. The U.S. economy only added 245,000 jobs. So it's a bearish sentiment. But get this. Do you want to know why sentiment was up? Because the fact that the number was so low, they do think it's going to prompt lawmakers to move forward with quicker fiscal stimulus. From senior investment manager at Alliance, Charlie Ripley. He said Friday jobs report data is, quote, a beckoning for lawmakers to act on fiscal stimulus measures in order to bridge the output gap in the economy until a vaccine is deployed and the longer blah, 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 blah. Point is, institutions think that this bad number means fiscal stimulus is coming. So if you're a PPE, somebody who took PPE, hey, fingers crossed, maybe you get some of that. But it is very interesting how sentiment is completely flip-flopped on this. You want to be sure if you're trading the markets out there, guys, I'm telling you, got to know what you're doing. Because trust me, in the old school days when that numbers dropped, baby, we're selling, baby. We selling it. There are levels to sell. Not today, though. Crude oil had itself a good day, though. Up a full percentage point, 46.07, 45.59 for the back end. That's a percentage as well. Natural gas does a little bit of rebounding, up 2 percentage points. We're still trading at $2.55, so not that good. $2.71. On the back end, that's only about 3/4 percentage point on the upside. Holy smokes, you're an energy investor today? You did great. Equities for oil up 7.8 percentage points, 60.53. That represents a $4 increase in the opening price. OIH, which are Oilfield Services, was up 7 percentage points. So holy smokes, someone's making money out there in the energy business. And again, guys, this is because oil prices continue to rise. We're going to read the companies who are on the upside. You tell me what that list says, okay? But we'll first start on the downside. Arch Resources down 1%. Hess Midstream down 2 percentage points. Chinese National Offshore Oil Company down 2 percentage points. I wonder why. We'll cover that. Phoenix Minerals down 3 percentage points. And our friends at Baytex down 3.5 percentage points at 52 cents. Guys, on the upside, look at these numbers. Cosmos Energy, 13 percentage points. Continental Resources up 14. We'll cover why. Amplify Energy Resource up 15. These top three are interesting. CDEV up 17 percentage points. Laredo up 23 percentage points. Callan up 25. I wonder why. Maybe it's because they can start to make some money at these prices, and they were probably some of the companies that were mostly price sensitive. That's what this list tells me. I could be wrong, but this is what this list tells me from a trading perspective. Traders are eyeing these companies. Callan's been on the list every time oil spikes $10. They're up huge. Why? Because they're very price sensitive. Little hedge, very little hedging. CDEV, we know the story behind them. Laredo, we know the story behind that. So that's what you're seeing when you see these big. As oil continues to chunk up, we're going to see the more price sensitive companies continue to rise. Over a certain point, we'll see a flattening out. But that's the kind of the gauge I'm reading at in the markets here. Before we go ahead and dive into the international news desk, guys, I need to tell you about our friends at Data Gumbo, a worldwide technology company that's offering solutions in the blockchain technology space, guys. They are increasing transactional certainty, increasing cost savings. Go get yourself a big helping of Data Gumbo, www.datagumbo.com. We ran an article on how to lower lowering your OPEX this week. And I think it's an interesting thing because when we talked about ConocoPhillips is laying off 500 jobs due to that Concho merger. Well, so when these mergers happen and they talk about cost savings, a lot of it comes through G&A, but there are other ways to do it. We talk about some of the stuff that Data Gumbo's doing on the OPEX side. Stu, as they said, lower millions of dollars a year, and that's 10 jobs right there. That's no snuff of money right there. So guys, go get yourself a big helping of Data Gumbo, www.datagumbo.com. Stu, internationally, there's an OPEC update for us, right?
Oh, you bet. Hey, but just as a side note, when we interviewed the CEO and founder of Data Gumbo, he had an excellent point, and that was why lay people off when I can save you more money? Let's keep our good people at work. So good point, Michael.
Also, I mean, what's nice is when you're selling something that increases the efficiency of a company and decreases the cost for a company, it doesn't matter what business cycle you're in, up, down, left, right. I don't care where oil price is going. All you need to do is show the value prop and it sells. And that's exactly what Data Gumbo does. We love them.
All right, love them. Hey, I got 2 articles on OPEC, and I think it's really kind of funny. There's some nuggets or nougats, depending of what part of the country you're from.
I'm a nougat guy.
You're a nougat? Okay, cool. The first one is oil moves up towards $50 a barrel after OPEC plus supply compromise. This guy had to have been, who wrote this, was a politician. Let's see here. He called it a minor upgrade in output. How do you say a minor upgrade? He was almost calling it like that. So our 5.5, he goes, known as OPEC, they're set to reduce production by 7.2 barrels per day, or 7%. That was an interesting way to say they're increasing.
Well, this guy, it's what it sounds like to me is this dude's just a perma bull, and he's just on the train of oil's going up, oil's going up.
Yep. So anyway, the other one had an interesting article on it with OPEC plus, and they come out plain as day and say basically OPEC plus could care less about the pricing, and they say that oil is probably going to recover in Q2 of next year, but OPEC plus and OPEC are going to go aggressively to wipe out the shale business before it can recover. I thought that was very big in this article.
We used to say, I played college baseball. We used to say, when you got to team up 2-game, you play a 4-game series, you got to team up 2-0. You got them on the ground, put your foot on the throat.
And this goes back to what we said yesterday about all these meetings with OPEC. They mean nothing because they're going to try to take our wonderful shale people out. So I thought that was interesting on the OPEC stuff today. Unbelievable.
Really unbelievable. Hey, the international news desk has been popping, and I know you have some very strong stuff coming around the corner.
Yeah, I sent you a little teaser, didn't I?
Yeah, we won't release it quite yet, but woo, guys. Club Med is really starting to become Club Med. That's what it sounds like.
It's going to get nasty. We did this one. I love our graphics department. Our fans love our graphic department.
Is this the $7 billion wire?
Oh, absolutely. This thing was $13 billion. And
remind our listeners, what was this? So the story is, and correct me if I'm wrong, it's a Shell offshore natural gas facility, $13 billion. It's been offline for a while because of a wire.
February. One wire. Okay, $13 billion. Talk about a heavy investment in this. And here's the funny part. Are you ready? The headline on this article is Australia's LNG exports at a 9-month high. This thing went offline 9 months ago. So they birthed a $13 billion rut row. That one hurt coming out.
Shell, next time you decide to do this, I'll get it done for $12.5 billion.
Okay.
I'll save you $500 million. All you got to do is pay me, I don't know, $1, $2, $3 million. We're cheap.
Our shout goes out to the record shipments out of Queensland Port of Gladstone. Well done, guys. Record shipments, even without a $13 billion ship.
Yeah, have a Foster's for me over there. Let's cover three things real quick. First, we got to cover oil rigs. They're up 1. Now, that's overall. That's U.S. oil and gas count. To give you an idea, oil basins lose 4 rigs. Gas adds 5 rigs. So, baby, we're drilling gas. 250 gas? No, we're drilling, baby. We're drilling. 40% higher than we were in July than when you talk about overall levels. So, I mean, people are drilling. Again, we're inching closer to, like I said, that 50% mark. To give you an idea, gas rigs are 90% of mid-March levels, which is pretty unbelievable when you talk about the Marcellus, Haynesville, and Utica. Oil basins are only about 40%, so it kind of shows you the gap. People are bullish on natural gas. I don't know about it.
I
mean,
am.
250, Stu, it's when I don't want to freak out too much, but we did how many energy expert interviews this summer and through August, through September, and what was it? $4 gas, $4.50 gas. Stu, I've never seen it. We saw 320 gas, which ironically was what the amazing Kreskin found us like 6 months ago. And now we're at 250. When can we admit we swung and missed at the natural gas outlook? It's fine. It happens all the time. You got to give it a couple months, 2 months.
Q1, end of Q1, you will see 350 easily.
Yeah, they were telling me that in July.
No,
you were telling me that in July.
No, we hit 320, didn't we?
Yes. Okay.
But there's some more trigger coming around the corner. I'm going to tease our fans.
You're teasing me. Okay. I'm still skeptical. I've made money on this position being basically bearish on natural gas in light of everybody on the bull train. I've been trying to hold the train back. And you know what? I'm winning. 250 gas. This is where we need a cart, or not a cart, but like a online store. I want to sell 250 gas shirts. Just because.
Oh yeah. No, this is like Saturday Night Live. You don't know what you're talking about. You're ignorant.
I am. All right, Continental. Here we go. Good news for Continentals. We talked about they were up 14 percentage points today off the back that they will go ahead and redeem $400 million of their 631 principal notes, 5% senior that are actually due in 2022. That represents about 63% of it. So, hey, the rumor is with Continental, Harold Hamm is lining himself up to take it private.
Oh yeah.
Why not? If you're Harold Hamm, it's probably the best move for Continental. This is probably a move towards that. What's interesting is the market reacts positively. If Harold Hamm's going to take this private, it's going to be him. It's going to be a couple institutions. It'll be interesting to see who comes in and takes this bad boy private. Is it going to be Harold himself? Is he going to partner with somebody else? I don't think it's going to. Like I said, forewarning. I don't. There's no rumors. I haven't heard anything. I have no knowledge that this is going to happen. I do think this is a sign. The tea leaves have been saying he's been wanting to sell for 6 months now, or cash out, or take it private, or do something along that nature. I think this probably is a step to see if he can maybe make that happen. But as with everybody on natural gas, I'm always open to being wrong. I seem like the only person.
No, you are absolutely brilliant, Michael. And I don't want to but hey,
I will cut your check after the show, Stu. Okay. Your check's just held. I know it's just held up in processing. You don't need to lie to everybody. I'll get that to you at the end of the show.
Hey, Harold Hamm, just a side note, when he got divorced, that man is brilliant. He owed $1 billion to his ex-wife. He sent a check for $9,999,099. He sent it 3 cents short of $1 billion.
That's funny. That is funny.
Sorry.
If you're settling a divorce for $1 billion, I mean, you've made a lot of money in your career. So I think but that's still wild. I think I've seen a picture of that check.
Yes, I think he can take it public. I mean, talk private if he wants to.
What I heard was he needs a little bit of help. He needs a little bit of help, but we'll see. We'll see what happens. Anything else we missed today, Stu? I'm pooped. I'm about to go take a nap.
Go take a nap. You've earned it. You've done a fabulous job this week.
Well, with that, guys, for Stuart, Turley, I'm Michael Tanner. We're going to go ahead and give you guys our hall pass, let you finish your day. Get out of here. Start your weekend. We will see you guys on Monday for our long form podcast and in the afternoon for another Energy News Beat. Stay on the beat.